Hey everyone, welcome to today's live stream. It is Monday, May 5th, 2025. Hope you're doing great. Lots to cover on the stream today. This week, all about earnings. Earnings are coming in from the technology companies across the board. We got Palantir after the close today. That's going to be an interesting one to watch. Supermicro after the close tomorrow. AMD after the close tomorrow. Rivian. I mean, it just, the list goes on and on. Uber on Wednesday. Peloton Thursday and Friday. Some pharmaceutical companies. So Coinbase on Thursday as well. So anyway, just take a look at some of those. That is affecting option contract prices. I'm seeing calls for technology stocks, quite lucrative this week. So check those out. And okay, so let's dive in. I want to show you this is actually on our homepage. So when you first arrive at our site, you'll come to this page. This is our demo account. And that's why the name Kelsey Smith is up there. But essentially, as you scroll down, you're going to see interesting stocks. These are stocks that are basically, either 30-day bests or most active in today's trading or trending. So they're going to fall in one of those categories for this particular section. But what we also show you are if a stock is included in any index, we're going to show you which index it's included in. So for example, AMD is included in the S&P 500 and the NASDAQ 100. So just to kind of give you a heads up there, that you know that stock is part of an index and which particular index it's in. And then we're also showing you either the base, growth, or accelerate categories. All of the stocks that we track on the US exchanges can potentially fit in that particular part of your portfolio, either on the base side, growth, or accelerate, and then they're color coded. And they say it on there, right? AMD base. Why is that a base stock? Because it's such low volatility, low risk. That is why it's considered a base stock. The next category is growth. And we've got a couple that look like they're in three in that category. PCB Bancorp, 5-star rated stock, average risk. And that's pretty much where you're going to find all the growth stocks, average risk to above, slightly below average risk. And then the last category is the accelerate category. That's our high risk or above average risk stocks you'll find in the high risk category. Now, what am I referring to? I'm referring to here, the portfolio assistant. After you take the risk assessment questionnaire, you land on the portfolio assistant page and it will show you your level of risk and it will show the stocks in the values in the base, growth, and accelerate category. So that's when I was saying, stocks are correlated to one of three aspects of the portfolio assistant, and this is where you go to find that. So because Kelsey's risk is high, we have shown the NASDAQ 100 as a potential target for this type of investor. So if you're high risk, we're going to show you the NASDAQ 100. Why? Because the majority is in healthcare or technology. 55% healthcare. That's Kelsey's stocks currently right here. 40% technology, 14% in healthcare, and then some of the other sectors are represented here. But essentially, we really want to focus on the sectors that have a 10% weighting or higher. So that would be healthcare, technology, consumer cyclical, industrials, financials. And then we'll show the portfolio, your portfolio versus the NASDAQ 100. So at a quick glance on our bar chart, You can see if your weighting is overweighted or underweighted. It's easy to see this demo portfolio is overweighted in healthcare stocks compared to the NASDAQ 100. So this is really helpful for folks who are like, I'd be happy with a performance similar to the indexes. This is why this was created. So you can track, in order to get performance similar to an index, you have to have the weighting, sector weightings similar to the indexes. That makes sense? So, so you keep scrolling down and then you get here for a well-rounded portfolio, consider these steps. And essentially this particular portfolio is calling for an increase in the growth category, a decrease in the base. And so what you do is you click through, and if you're looking, so here is a section of the portfolio that has to be increased. So you just click here for average risk, and we're going to show you average risk stocks. And we're going to, what we've done is we top loaded the particular companies that are found in indexes. So Honeywell International is found in the NASDAQ 100, S&P, and the Dow Jones. So obviously this is a big company, a very compelling company to be included in so many of these indexes, and potentially a stock that you'd want to own. 4-star rated, all looks pretty good there. And then of course we've got NVIDIA, and you just kind of scroll down, but keep with these upper, like go down 2 rows, maybe 3 rows. But after that, you're going to see that some of these stocks drop off, that and aren't included in the indexes. So I just wanted to show you real quickly, where to find certain information and in order to really get the most out of our software. Okay, a couple things to talk about. This announcement made last week, the CEO of Amazon, Jeff Bezos, selling 25 million shares as tariffs and cloud growth weigh on outlook. That's over $5 billion, by the way. Amazon reported slower than expected cloud revenue. Amazon has that AWS, Amazon Web Service, and the growth isn't what they had thought. Very disappointing, and the shares dropped. Amazon Web Services posted a 16.9% increase in quarterly revenue to $29.27 billion, missing expectations of 17.4% growth and $30.9 billion in sales. If you notice, these numbers are really not that far off, but yet still very much an impact in the price of the stock. It fell 5% in after hours trading, then it stabilized. But when you have a stock missing in earnings and you have the CEO selling more shares of his holdings, I think you just got to kind of go, maybe this one I'll stay away from for now. There's plenty of great companies out there. So I just want to bring that to your attention because I'm noticing that insiders are almost perfect sellers, not great buyers, but almost perfect sellers. And so we're looking at the announcement of 25 million shares being sold of Amazon. And when we scroll through here, look, insider activity, almost 90% of all holders are selling. The insiders are selling versus buying. So I think you just want to kind of steer clear of the stock. We only have a 2-star ranking on it right now, which actually is a sell ranking. I would agree with that, is well below the SMA 200 and SMA 50. And really going to have some tough sledding ahead here. So just want to make you aware of what is going on with that. Also, interesting tweet last week from David Rosenberg. He says, we're living through history. Only 0.25% of the time in the past century, that's 100 years, as you know, has the S&P 500 managed to rise 9 consecutive days. Remember last week and the week before, 9 days, up and up and up. a 1 in 400 or 3 sigma event. Guess what? Fully 80% of the time, this dynamic happened in recessionary environments. Not to mention, just ahead of the October 1987 crash, maybe this quote bullish manic move isn't so bullish after all, but just kind of an interesting observation on his part that, you know, they were clocking like this meteoric rise of the S&P 500 over the last 9 trading days, although today it's pulled back a little bit. Just something to consider, right? Like a lot of investors are raising cash right now, sitting in cash, you know, just being very kind of hesitant, you know, and example, if you're like an options player and if you sell puts to back into share of companies, then you'd want to really look at selling way out of the money and keep them short term rather than long term. So look at weekly contracts. I wouldn't go any further out in this market, maybe into next week, next Friday expiry, but not much further than that just because of the risk potentially associated with it. Big announcement too, Berkshire Hathaway stock drops after Warren Buffett announces his successor. So Warren Buffett is stepping down. Big changes happening, you know, like kind of the changing of the guards, if you will. You know, I mean, you can't blame him. He's done a fantastic job his entire life. Is he 80? I forget his age, but he did announce the CEO change on Saturday at their 60th annual meeting. So he's been doing this longer than 60 years. He's been an investor in stocks since age 11, but he's had 60 consecutive annual meetings for Berkshire Hathaway. He'll still remain the chairman, but it looks like the new CEO will be taking over January 1st, 2026. So there you go. Took a big hit today. Berkshire Hathaway B shares are down 4.5% currently. So we're just going to have to see, right? But, you know, with a sell-off like this might be an interesting opportunity because the stock, Berkshire Hathaway B shares don't usually fluctuate that much in value. So to have nearly a 5% drop in a day, very, very interesting for this. Now, they still have hundreds of billions of dollars in cash that they can at some point deploy and take advantage of lower stock prices. I don't think they've moved much cash into the markets yet. I think they're still waiting for a pullback. So, you know, I think this week is going to be interesting to watch, and all the earnings coming out this week. Uber, I'm interested in seeing, as well as D-Wave. You know, D-Wave is one of those companies that was closely aligned with the AI movement. But, you know, it's just going to be interesting to see what the returns are for their earnings. So, as always, you know, really stay positive about this market. There's always going to be some type of narrative pulling it up and down. The good news is you can make money either way, whether the stock market's going up or down. And the great thing is the higher the volatility, the actual more money you will make in this market. So volatility is super helpful as an investor. As you know, we've talked about that a lot. Really stay within these companies that are 4 and 5 star rated, big names, you know, that we're looking at. Westinghouse, Air Brake Technologies Corporation, Industrials Railroad sounds like a great company to look at on the New York Stock Exchange. And, you know, just continue to look at companies that have these great ratings. 4 or 5 star rated stocks are really important for, you know, to be in it in the long run. And hopefully some of these will not be as volatile as lesser rated stocks. So stay with quality companies. I guess that's really what I'm trying to say through all this, and look at investing dollar cost average into these stocks. What that means is you just continue to add money to them, buy them Even with call contracts, if you're an options player and you're selling covered calls against your positions, you don't have to really go too far out of the money. I don't think this week at all, because a lot of companies are overbought, MFIs are super high, and we're looking for some type of pullback here this week or next. So you can stay within a reasonable, maybe 5 to 7% or 10 if you're really, if you're way underwater with the stock. Then look at a 10% call contract out of the money and call it good. All right, y'all, have a